Bitcoin's going to rocket to the high end of the range, and the high end of the range is going to be 250 to 300. I can see gold going to 10,000, maybe 15 or 20, full monetary reset, maybe 50. And the reason the price is down right now is actually the reason why it's going to be up so much in the future. And that is Bitcoin's the best functioning fire alarm for liquidity. It's driven by liquidity in the financial system. If you just want to, protect your capital and protect yourself from debasement, you don't trust digital assets, and you don't like volatility, gold and silver are great choices. You don't even have to go to Bitcoin. If you're looking for alpha, which is the highest rate of return, I think Bitcoin's going to give it to you in the next 5 or 10 years.
Lepard begins with a fundamental distinction rooted in historical acceptance. Gold and silver, he argues, remain the dominant safe haven assets because they are universally understood as money. Central banks accumulate them, governments recognize them, and billions of individuals across cultures accept their role as stores of value. Before we go on, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more content like this. Every action helps with the YouTube algorithm and greatly supports the channel's growth. Thanks for your support and enjoy the video.
The 5,000-year-old safe havens are the precious metals. And the reason that, the precious metals are outperforming Bitcoin is that central banks buy them, and there are 7 billion people on the planet who understand that gold is a safe form of money. Bitcoin is an emerging safe haven, and I want to emphasize the emerging piece of it. The number of people who are aware of Bitcoin in the world, it's probably less than 5% if you take the entire world. And the number of people who own it is probably, worldwide, it's probably less than 1%. And everyone's quite skeptical of it. And so, this is just what happens when you have a new monetary standard coming into place, and it goes through cycles of Bitcoin's going to 10 million and it's going to eat the entire world. I remember Bitcoin was 100,000, Saylor was throwing his party, everybody was thinking this is fabulous, and gold guys were in the dumps, and I remember the sentiment then, great. And Bitcoin had crushed gold on every single time frame. Now the roles have been reversed, and gold, and certainly in the shorter time frames, has crushed Bitcoin. If you go back long enough, Bitcoin's still relatively far ahead, but so now Bitcoin's dead, and this is what it does. It goes from euphoria to complete, no, it's not going to work. There's FUD, and people have all kinds of different reasons. It's quantum threat, whatever it might be, which I think is bullshit. I don't think there's any threat there. And so this is just human emotion in a very new, in monetary terms, 17 years doesn't compare favorably to 5,000. Okay. But that does not mean Bitcoin's dead. And that does not mean Bitcoin won't, over the next 10 or 20 years, outperform gold, because I think it will, and I think it will massively. But the price of that outperformance is this volatility. And the reason the price is down right now is actually the reason why it's going to be up so much in the future. And that is Bitcoin's the best functioning fire alarm for liquidity. It's driven by liquidity in the financial system. And it's driven by, aggressive liquidity, risk-taking liquidity. People who want to take risk, want to speculate, would look at something new, a new technology like an NVIDIA, and they would speculate in it. And Bitcoin represents that. And so, my view is that what Bitcoin's price being down right now tells you is that liquidity is getting tight. And I've seen a lot of charts that suggest that. And in fact, we've also seen the Federal Reserve, reverse their policy and start printing money again. So that suggests that. Even, in a tight liquidity environment, gold could do well, primarily because what happens is people are looking for a safe haven. And so gold becomes like a bond. And so, that's really what's happened. We've had a liquidity squeeze, and so Bitcoin has contracted down to the lower end of its range. But I think what that's going to lead to is a situation where the government literally has to print money, a big print, as I would say, again, and that when that occurs, Bitcoin is going to rocket to the high end of the range, and the high end of the range is going to be 250 to 300. And so, and look, one of the biggest arguments against Bitcoin is this can't be money because it's too volatile. And my counter argument to that is, no, of course it's volatile. It's just emerging. This is what happens when you have a new standard emerging. Everyone thinks it's great. Everyone thinks it's shit. Everyone thinks it's great. Everyone thinks it's shit. And so, I've known Peter for a long time too. I think he's kind of butthurt that Bitcoin stole his thunder. It's still, on the longer term time frame, it still has outperformed him massively. And I think it will continue to do so. But there are brief periods of time where gold looks a whole lot better, and we're in one of them right now. So, my takeaway from that is that's a signal to buy Bitcoin and sell gold. And, I've been doing some of that. I have a lot of gold. I have a lot of silver. I have a lot of gold and silver stocks, in my fund and personally. And, I've been tending to harvest profits in the gold and silver stock area, and then take that and put it into Bitcoin and MicroStrategy, which I think is the best Bitcoin stock. So, look, everyone has to figure out what the risk preferences are. I mean, if you just want to, protect your capital and protect yourself from debasement, you don't trust digital assets, and you don't like volatility, gold and silver are great choices. You don't even have to go to Bitcoin. If you're looking for alpha, which is the highest rate of return, I think Bitcoin's going to give it to you in the next 5 or 10 years. So I think it will beat gold substantially in the next 5 or 10 years. I mean, I can see gold going to 10,000, maybe 15 or 20, full monetary reset, maybe 50. I think Bitcoin, the next time it moves, the last time it moved, this is an interesting statistic too. I think it's useful to take you through this history. Let's go back to 2019. In 2019, the Fed had to pivot because we had a repo rate blowout in the fall. And, liquidity got too tight. Repo rates went up to 10%. And Powell totally changed. He was shrinking his balance sheet. There was no QE. Rates were higher, et cetera. And when that happened, he immediately changed all three of those policies. He cut rates. He started buying, bonds again, QE, printing money. And, on a go-forward basis, he was accommodative, okay, with lower rates. And so, and in reaction, and then COVID hit, and it got even worse. And in reaction to that, gold went from 1,200 to 2,000. That was in, February, March of 2020, COVID. At the time, Bitcoin was somewhere stuck between 5 and 10,000, okay? So throughout the whole summer, gold kind of traded between, 1,900 and 2,100. Gold stocks went up a lot. My funds had 2 really great years. All right, great. It's now October. Bitcoin's still stuck at 10,000, but he's now printed $5 trillion, and it's seeping its way into the economy, and PPP loans and all the other stuff that they did, direct stimmies, et cetera. Bang, Bitcoin woke up and it went from 10 to 60. And it took 5 months to do it. So it went up 6x in 5 months, okay? I mean, 6x. I mean, gold has never gone up 6x in any short period of time. And of course, then it chopped around at 60, and Sam Bankman-Fried took it back down again, blah, blah, blah. But the point is, I think this is going to be a very similar cycle. You have these drawdowns. They're between 50 and 70%. We just had 50. We might get to 60. I doubt we get to 70. And then, what's going to happen here is they're going to have to start printing because the math dictates that. They will start printing. And when that occurs, Bitcoin's going to wake up and just go from 60 to, 6x would be 360. I don't think it'll do that. I mean, one of the things that's happened over 17 years of Bitcoin is, the ups have been smaller and the downs have been smaller. It's getting more accepted. The volatility is not as high. Still high, but not as high as it was. So, instead of going up 6x, maybe it goes up 4x. So if it goes up 4x off 60, that takes you to 240, which I think is entirely possible in the next 2 years. So, it's just one of those things, Tom. It's just the way it works. But it's hard for people to see that. The other thing I would point out, and this is a really interesting statistic, it came out of Fred Krueger's book called Bitcoin 1 Million, which is must reading in my view, is that if Bitcoin between 2018 and 2025, so that's a 7-year period, it went up 600%, roughly, round numbers, okay? If you missed the best 20 days, you didn't make any money. Now think about that. 7 years, yeah. You missed the best 20 days, you didn't make. In other words, when it moves, it goes bananas. So once the liquidity comes, and once this thing starts moving, it's not going from 60 to 90. It's going from 60 to 250, in a short period of time. And, you can think to yourself, well, I'll wait until that starts happening before you do it. Fine. But there are lots of periods where it's gone up 20 or 30% in 2 weeks. So, you better be ready. And my view is the better way to approach it is just buy it and hold it
Yeah,
or
that's what
dollar
I'm
cost
doing.
average it. I mean, really,
Yeah.
actually, the best way to do it, in my view, is just you dollar cost average it. You just buy a fixed amount every, you say, I want to have 10% of my net worth in Bitcoin. Fine. You divide that out over 11, 12 months. You buy 1% a month, right? And just, and you average it at whatever the price is.
Lepard links liquidity cycles directly to policy decisions by the Federal Reserve under the leadership of Jerome Powell. He argues that financial conditions periodically tighten to levels incompatible with economic stability, forcing policymakers to reverse course and expand the money supply.
This is the roller coaster of this game. I mean, I bought Bitcoin at 65. I bought Bitcoin at 17 in 2017. I watched it go down to 3, and I doubled down. I mean, it's you gotta understand what you own here. And, can the rewards be big? Yeah, they can be really big. And I think they will be really big. Is the price of getting there free? Nope, nothing's free. The price of getting there is you got to be willing. I mean, I think you've told me in the past, I think you own some Bitcoin, right? I mean,
oh, sure.
You just don't think about selling it, right? I mean, I look at it as my long-term savings. I know it'll be worth more in the future. But a lot of people, they come at it and they're just, they so much of America is short-term focused, and I've seen people who, when it hit 100,000, they bought it at 50, it hit 100, they felt great about it, and they sold it at 100. I said, what are you doing that for?
Yeah.
It's going to 1 million, and then it's going to 10 million, and it is. I mean, again, read some of the books. You've got to, it's not like we're operating in a vacuum here. We now have 17 years of data. So read Bitcoin 1 Million. It's a great book by Fred Krueger, and it'll take you through the logic and the model, the mathematical model. And I put a lot of faith in models that have been successful, with a 96% R squared. I think there's a lot of logic to it. So, to me, I'm just hanging with it. I think it's going to work well. There's really nothing fishy about the model at all. It's really quite simple. It's financial engineering. What he's doing, he's got an asset that over a long period of time is growing right now at about 40. I mean, you got to understand what's going on with the Bitcoin price. You really have to understand what the power law is and how the power law, for 17 years has predicted the price of Bitcoin with an R squared of 96%. So right now, the Bitcoin average rate of return is 40% a year, okay? So what he's doing with a stretch product, his preferred stock, he is saying to a boomer, I will pay you 10% guaranteed in interest payments, and I will strip off the other 30% from my common shareholders. And so my stock is going to be very volatile because when Bitcoin goes up, I'm going to look like a genius. When Bitcoin goes down, I'm going to look like a goat. But I do know that over a long period of time, and he uses the 4 to 10 year window, and I think that's the right window to use. I do know that over a long period of time, unless Bitcoin stops going up at that rate, and I don't see anything to suggest it has stopped or will stop going up at that rate, I can pay you 11% and my shareholders will get the difference. And it's just as simple as that. And I've looked at the company, Tom, you can't break it. You can't financially break the company. I mean, the preferred is covered 6 times. It's perpetual equity capital. He doesn't have to pay it back. All he's got to do is make the 11% interest payment. And, what he's doing is he's just taking that cash and putting it into an asset that's very volatile and, stripping off the 11% for a boomer. And by the way, the boomer, I own some, but by the way, the boomer who buys that gets 11%. They also get that 11% tax deferred. What does that mean? Well, because he's issuing common to buy the stock or to pay the dividend, your money you get on the dividend is a return of capital. So if you put, $1 million into, stretch, you get 11% returns. You get 110,000 annual, interest income off of that. Okay. And normally if you had that kind of dividend income, you'd pay taxes on it, dividend, but you don't. What happens is your basis gets reduced. So 11% actually becomes more like a 16 or a 17% effective yield to you until the first 9 years are over, because every year your basis goes down. So, it's a very attractive product for the boomer class, and it gives them a way to participate in Bitcoin in the sense that they are getting a much higher than market yield, and admittedly they may, you're taking Bitcoin risk. I mean, look, here's what happens. If Bitcoin fails, Saylor goes bankrupt. There's no doubt about it, okay? But, I don't think, there's no evidence to me that Bitcoin is or will fail. In fact, to the contrary, I think there's incredible evidence, 17 years of it, that Bitcoin is going to continue to march higher. Every low is higher than the prior low. Every high is higher than the prior high. The power law model suggests that the mean power law valuation in 2032 is $1 million. And I think we'll get there. And power law also shows that over that 17-year time frame, there's never been a drawdown that took you below 1/2 a standard deviation of the average of the power law price. Right now, that 1/2 a standard deviation is 55-ish, something like that. So, could we go down to 55 or 50? Yeah, maybe. But I don't think it'll stay there very long.
According to Lawrence Lepard, liquidity cycles, policy responses, and adoption dynamics will continue to shape the interaction between these assets. Periods of divergence are not contradictions, but expressions of their distinct roles within the monetary hierarchy.